Hey guys, this is Logan Freeman, and this is the LiveFree Investors Podcast. I interview investors and business owners who share investment advice so you too can live free. Today, I'm talking to Ferd. Ferd, in a few sentences, tell us who you are and what you do.
Thanks, Logan. Appreciate you having me on here.
Of course.
First time on one of these, so kind of a rookie, so go easy on me. But
That's all right. I love being
I'm
the first timer.
all right. I'm a real estate investor. I guess kind of wear different hats depending on the day, depending on the project. I'm a real estate attorney by trade, and a finance background. So sometimes I'll do underwriting or due diligence for third-party folks. But for the most part, work on my own account. Really, the last year and a half, focused on mobile home parks.
Yep.
Before that, did a lot of single family, duplex, did some retail development. And the legal background, I did a lot of tax incentives, land use, entitlement stuff. But really, right now, trying to get while the going's good on the mobile home park business, and that's where I spend most of my time, which partially as an operator, partially as an investor, third-party manager.
Yeah, and I'm really curious to ask about the mobile home park world because it seems to me that that's an asset class that a lot of our investors are continually asking us about. So, how did you find yourself in that asset class, specializing in that, and then talk to us about the current state of that asset class because it seems like it's probably already overheated, or maybe it's there's an opportunity there. But talk to us a little bit about that.
Sure. Yeah, as far as the current asset class, it's unbelievably overheated. I mean, people are paying crazy prices. I just heard the other day on a webinar in a region of Florida and in a region of Arizona, the cap rates on mobile home parks have now been compressed and are below apartments. But that's the first time ever. And mobile home
Wow.
parks have been the number one asset class for about 10 years as far as default on loans. So they've just been really stable, really strong, and the lid's kind of been blown off. I wish I would have got into it 2 or 3 years earlier. I'd probably be retired on a beach somewhere. But I got it. I got in at a pretty good time, but not good enough. But it's going well. I've been doing it for about 6 years on mobile home parks on the side, full time, about the last 2 years.
Yeah.
And then prior to that, I was doing single family, duplex, and retail stuff for over about 10 years. But really just kind of got into this asset class. I was a real estate analyst in Jackson County, and I worked on kind of complex commercial real estate projects, underwriting TIF deals, tax increment financing, tax payment deals, Chapter 100 bond projects, just kind of anything public finance related. So I got to see a lot of developers, and I see a lot
Yeah.
of deals, kind of get under the tent and throw rocks at their deal and try to figure out what was good, what wasn't good. And at the time, I probably had 10 or 12 single family houses, and I was making a really good return percentage wise. So say 25, 30, 50% return, but it didn't really feel scalable. And then I
Sure.
saw these big shots with these big 10 and 50 and $100 million projects. They're making lower percentage return. I was like, well, it was kind of disingenuous to compare them apples and oranges, because it was, it's easy to double my business. It's hard to double, Coca-Cola or something like that. So
Yeah.
after looking at all the deals, I thought, what can I do that's scalable more than 100 houses, 200 houses, 300 houses? It's like I could do 2 100-unit apartment complexes, but you can't get the same yield very often because they're so much more competitive. And,
Right.
people with money want to buy this. It's a lot more competitive. So anyway, I looked at all asset classes and determined in my mind that the operating expense ratio was lowest for self-storage and for mobile home parks. And I started to pursue the two. And then I ended up determining that mobile home parks were going to be less price sensitive. Whereas self-storage, if you up the rent 20%, people go down the street. Mobile home park, you have to rent 20%, nobody moves.
Right.
So got involved. It's mostly by kind of bruised or broken parks and try to fix them up, as opposed to stabilized. Stabilized assets are selling at a real premium, just like in all asset types. But as far as
Sure.
distressed, there's some opportunity to make some money out there.
Yeah, absolutely. I'm curious to dive into that, and I think we should probably do an episode just on mobile home parks and maybe what the opportunity lies in even finding some ground and creating those mobile home parks in the right areas. But so thanks for sharing that. We'll dive into that on another episode. Ferd, what's the best thing about being an investor in your mind?
I think the best thing is just working for yourself. And when you get something done and you accomplish it and you get that sense of fulfillment, you're helping your own project. I mean, I worked hard for a lot of years, for the county and for a law firm and for other developers. And sometimes the money was there, sometimes it wasn't. But it was like you're working hard for the man. I work more hours now than I did as an associate at a law firm.
Sure.
but it doesn't feel like work because it's for the good of my own cause, and it's inspiring, and it's fun.
Yeah, and Seth was in town, Seth Bradley, last week, and he's on the attorney side of things as well. So I do think there's we had a lot of conversations about you know the opportunity to approach more real estate attorneys on actually investing into real estate, and that's kind of an idea that we're going to continue to run with, especially on the capital raising side. But it's just a natural progression, right? And I've seen it with him, seen it with you. One of my clients is an attorney in Omaha, so I think there's a big niche there that is untapped per se. And I think a lot of guys on the general partnership side sometimes are weary to get in business with attorneys because you guys are smarter than us, and so we have to be really, really careful. But that's just not the case. It's been really great to get to know you and Seth and Chris and all these other attorneys. And, I think it's the person behind the obviously the job title, but I think there's an untapped niche there and one that I'm excited to explore. There's a lot of things going on today in the economy, and I'm just curious, with all the different changes and different things that are happening. I know you're involved in CCIM as well. How do you stay up with the current trends and opportunities? Like, what do you read a lot? I see some books back there. I don't know if those are your wife's books, your kids' books, your books. Yeah, I see a lot of
Those
books
are
though.
those are all real estate. Those are all Catholic faith stuff.
Oh,
So
that's great. Yeah, absolutely,
like you,
man.
like to read lots of both. So yeah, I read
That's
lots of books
That's
all the
wonderful.
time.
So, other than reading, what do you think's your best tip on staying up with the current trends and opportunities?
Well, really, just trying to keep a network of people involved in all different areas. So, I mean, CCIM has been great for that. Where there's brokers, there's engineers, there's architects, developers, bankers, lawyers. So I'll always ask guys. I like to ask bankers a lot. Like, what are you seeing? What are the trends here? That's one way to kind of stay abreast of more macro level issues.
Sure.
I mean, as far as finding particular deals, I mean, just like anybody, it's any way you can. From
Yep.
cold calls, signs, drive by, personal network referrals. It's hard finding deals right now. I mean, right before COVID, I was looking for some more retail deals because the mobile home park space is so crowded right now with a bunch of private equity guys, a bunch of REITs that I'm just not willing to overpay
Yep.
at the level that other people are. But then obviously, from a retail perspective, it's a lot harder to raise capital, a lot harder to get financed, and then just sleep at night too. I got pretty fortunate timing. I was in 4 retail deals as a junior partner immediately before COVID, and I got out of them, sold
Sure.
out in February, and just like perfect timing.
Yeah.
I got out, got time to chase my own mobile home park deals and got some capital, and more importantly, got off a lot of notes with retail tenants. So
That's not a bad
any
idea.
way I can find a deal is good. Right now, I feel like everything's pretty frothy
Yep.
on the multifamily side and on the mobile home park side. And then on the retail side, I'm just kind of taking a step back, see how the dust settles on that. So
Sure.
really now just really transitioned the last 3 months to almost full-time operations to improve the assets I have. Because
Yep.
when I buy stuff that's 60% vacant, there's, it's got a 4-year, like one park in particular, I had a 4-year business plan to flip it. It's probably gonna be a 2-year plan, which has been
Sure.
great because we're just pouring lots of more time into it because we, have the time to focus on that instead of the next deal.
Absolutely. That's great advice. I'm curious what, you've been in the retail, development, attorney side of things, multifamily, self-storage, or sorry, mobile home parks. What do you think the best advice that you've received as an investor is up to this date?
Maybe not even really investor related, but I know my dad always said, do what you say you'll do.
Yeah.
So just it's part of being reliable and accountable, and he used to supervise people at a bank and he'd put it on the desk. Do what you say you'll do, and I think that's important from a responsibility, reliability, and then just always tell the truth.
Yep.
He always used to say too, like if I always tell the truth, I don't have to remember which side of the story I told.
It's my favorite
It's
quote.
really easy.
It's
It's really easy,
great.
So, and he used to joke like, I'm not smart enough to keep my story straight,
That's
so just
right.
tell the truth. It's easy. So, I think those 2 pieces of advice have been great. Just to help communication, especially as your enterprise grows and I've got a bunch of subcontractors and
Yep.
several employees and stuff. It's like you got to have regular communication and trust in that communication.
Yeah, and that's very fitting. It being one day after Father's Day, so happy late Father's Day, by the way. And
Same to you.
yeah, I appreciate that. That's a quote that I've been saying quite often. Actually, I've heard it a little bit different. I like that. You don't have to remember what side of the story you told. It's always nice to have a clear conscience, isn't it?
Oh yeah.
Yeah, it absolutely is. You can sleep at night, and that's when you have little kids like I do. It's important to sleep. This is a really social show. I'm curious. I sent these questions to you, and this is your opportunity to promote somebody to be on the show, similar to yourself. So, what successful investor, business owner, entrepreneur like yourself should be on the Live Free Investors podcast?
One guy I've been working with lately is Brooks Mosier at
Okay.
KC Property Group, and then it's three guys there: Nick Barella, Andy Lightfoot, and Brooks Mosier. But Brooks has been kind of my main point of contact. And those guys, they're doing some apartment deals, but they also they're hustlers, man. They flip over 100 houses a year. So
Yeah.
they do a lot of residential. So they've been I've known them for several years, really working with them now on a couple of projects, and it's just been good to get to know them. But they'd be a good guy to get on here that's beating the streets every day.
Yeah, I've been connected with Brooks, and we didn't connect on the phone, so this will be a great opportunity for us to do that. I appreciate that. This is a question I did not prep you for, Ferd, and I'm curious. This is my brand. It's all about living free and creating that freedom for yourself, for your family, so you can go do the greater good. But what's your best advice, or how do you think about living free on a daily basis?
Well, I think it's living free is just knowing you're doing something right and productive. Just having no regrets,
Yep.
and part of that I think is just dealing with good people you trust. And you mentioned GPLP partnerships, and there's one guy in town that's got a reputation for getting in deals with the hopes of taking over the GP
Sure.
when they make a mistake. So like obviously you want to avoid guys like that, and
Hmm.
just the more quality people you can associate with, there's the old saying, show me a man's friends and I can tell you what kind of man he is.
That's right.
And something to be said for that. So I think just try to continue to surround myself by good people, and really just cut out the toxic people. And I've been more productive in doing that in the last 6 months.
Yep.
It's been game changing to not have to dread, oh, this guy's calling me, like they didn't have my phone number anymore, he's
Yep.
blocked, it's like only good people.
That's right. That's great, man. Well, I appreciate all of that insight. Guys, this is Logan Freeman with the Live Free Investors podcast, where investors and business owners share advice so you too can live free. For more insights and ideas on how you can live free, connect and message with myself and Ferd today. Ferd, thanks again for joining us today.
You're welcome. Thanks for having me.
Until next time, guys, live free.